Welcome back, everyone. Today on the Joseph Carlson Show, we have breaking news. Trump posted on Truth Social that he is making some adjustments to his tariff plan. Now, he was tariffing the whole world, this insane amount, these reciprocal tariffs that were incredibly high percentages, 40, 50, 60% on places like South Korea and Japan and Europe, all over the place. But now he's made some adjustments. He says in this announcement that China is getting a bigger tariff. So with China, the US is actually going harder on China, but the rest of the world, we're doing a pause. The reciprocal tariffs are now being brought down to a base level of 10%. Now, we'll go over that entire Truth post, but as a result of that, the market has launched into the stratosphere. Stocks are going up a huge extent today. We'll be looking at what's going on with trading, how these companies are trading today, as well as how it's impacting my portfolio. I'll show you a little look at what's going on with mine. So we have a lot to get into. Let's go ahead and jump in. Now we start things off with, of course, the breaking news that President Trump has made major adjustments to his tariff policy. Now, as we go into this, it follows one rule that I have, which if the President of the United States says to buy stocks, it might be a good time to consider buying stocks. This has only happened a couple times throughout history. For example, back in March 3rd of 2009, one of the lowest points in the market with the S&P 500 being crushed, President Obama came out, who rarely comments on stocks or stock prices. He said it's probably a good time to buy right now. He was right. That was one of the only times he commented on the market, and he was correct. That was an excellent time to buy stocks. Now, President Trump, just this morning, posted on Truth Social, "Be cool," in all caps, and said, quote, "This is a great time to buy." He literally just came out and said, buy stocks. It's a great time to buy. Now, the market went up a little bit as a result of that, and then it went back down. Most investors just treated it as a casual pumping of stocks. He just wanted to get people excited. But President Trump knew something was coming. He knew that news was about to be released that would for sure cause the stock market to go up. And that news is this post right here. We have it from Truth Social from President Trump. He says, quote, "Based on the lack of respect that China has shown the world's markets, I am hereby raising the tariff charged to China by the United States of America to 125%, effective immediately. At some point, hopefully in the near future, China will realize that the days of ripping off the USA and other countries is no longer sustainable or acceptable. Conversely, and based on the fact that more than 75 countries have called representatives of the United States, including Departments of Commerce, Treasury, and the USTR, to negotiate a solution to the subjects being discussed relative to trade barriers and tariffs, currency manipulation, and non-monetary tariffs, and that these countries have not, at my strong suggestion, retaliated in any way, shape, or form against the United States, I have authorized a 90-day pause and substantially lowered reciprocal tariffs during this period to 10%, also effective immediately. Thank you for your attention to this matter." So what he says here is that we're now increasing our tariff on China specifically, but for every other country that we had these incredibly high, punitive, reciprocal tariffs, 40% tariffs, 30%, 50% on all these different countries, we're lowering every single other country's tariff down to 10%. And this is something that the market and investors can get behind. A policy where China is the odd man out, where China specifically is targeted with tariffs and our allies and friends are not targeted to such an aggressive degree. And this is something that I've also posted about frequently. In fact, just of this morning, before this announcement was made, I said, quote, "The market can get behind targeted tariffs against China. But right now, the US is targeting everyone at once, even our friends. The market can't get behind the US targeting everyone all at once, making enemies with even our friends and trading partners. But this is a lot more tailored strategy." So I'm very happy to see this pivot from President Trump to a more reasonable approach. It seems like somewhere in the administration, cooler heads prevailed, and they're now using a more tactful, targeted approach where the majority of tariffs go on China and the rest of these countries have a more reasonable tariff and time period to make trade negotiation deals. Overall, this is a far more practical, reasonable, sensible approach to doing business. And of course, the market is responding to this news. The market was looking for any glimmer of hope or silver lining that there would be some deal made, some timeline, some period of time that more sensible, cooler heads would prevail. So the news that Trump is doing a minor pivot and tweak to his strategy is very good news for investors. And you can see stocks reacting today. For example, Apple is in the green by 10.6%. Huge day for Apple. This is one of the companies that has the major focus and intensity of this tariff news. Now, Apple's not specifically out of the weeds yet because they do a lot of business with China. China tariffs have gone up. So why is Apple trading up today? I think it's because investors in Apple are at least seeing now that there's some reasonability, some tact to what's going on, and they interpret this news as meaning that the tariffs against China are not permanent. Microsoft is up 7.9% right now. Salesforce is up 7.7%. Nvidia is up 14.8%. Amazon's up 9.7%. Google's up 7.46%. Broadcom's up 15%. Meta's up 11%. Tesla's up 17% right now. Huge day for Tesla. Costco's up 5.5%. Netflix is up 6.49%. Booking is up 9.81% today. S&P Global's up 5%. Uber is up 10.6%. Across the board, companies are now trading up with renewed optimism. If we look at my portfolio and how this is impacting it directly, we can take a look here at the passive income portfolio. It's currently at $769 and $237,000 in gains. But this is trading around by the minute. The numbers are moving so quickly right now. I think it's hard for brokerages and all these websites to even keep up with how much this is moving. For example, if I just go to the 1 day here, the 1 day we're up 7.16%, which is $53,000. It's up $53,000 today. If we look at the story fund, it's now at $91,000 in the green, a total value of $289,000. And this is all changed in just an hour, just a couple minutes, in fact. This portfolio is up 8.02% on the day. That is another $21,000. These are seismic shifts in only 1 day. And like I've highlighted many times, just in my most previous episode, the reason that I buy so aggressively when opportunity presents on the big red days is because the big green days are often compacted right next to the big red days. Over the past 5 business days, it's been tough for investors. Obviously, with the market falling, with things going in a bad direction, it can become stressful. And I've seen even investors abandon their strategy, shifting away from what they plan to do because they're stressed out about what's going on. But it's important to know this delineation between understanding that something's going in a bad direction and still investing anyway. It's tough to reconcile these two things. Investors usually only want to invest when they believe that overall the macroeconomics are headed in a great direction. But by the time you get that news, by the time you get that clarity, it's too late. It's priced in immediately. This news, when Trump posted this, was priced in a minute. Stocks surged in seconds, literal seconds, stocks surge. You can't buy stocks after things become clear. If you want to get a deal, you have to buy during a time of unclarity, of unpredictability, during a time that it feels bad to buy. And this is the theme that I've been trying to highlight for months now, for weeks. This whole time period has been full of a lot of uncertainty. A lot of people disagree with the policy from the president. I'm one of the ones who I disagreed with the approach that was initially taken, the calculations for the reciprocal tariffs, and I thought it would be destructive to both the reputation of the United States and valuable trading partners. Now, notwithstanding my disagreement with the initial approach of the tariffs, I still bought stocks. And those are two different things that's difficult for some people to reconcile. That you can both disagree with the direction things are going, and you can continue to buy stocks at the same time. That's exactly what I've been doing. Even though I disagreed strongly with this initial approach to tackling this problem, I still continue to buy stocks. For the simple reason that if we wait for everything to become clear and predictable, the deals are gone. The uncertainty and the premium that you get for buying those companies during a time period that nobody else will is gone. And that's priced in very quick. So I've been buying this time period during this dip, and that's not to say that things can't go lower, but I think we're on a better path now. Now, one thing I'll mention is a couple months ago, in fact, this video was made, 2 months ago, February 3rd. This is a video where I went over the possible outcomes from the tariffs. And I outlined it very simply. And what I do here is I go through what I think are the only realistic outcomes of tariffs. First of all, tariffs are implemented by executive order, meaning they can be removed just as quick as they're placed on. They don't go through Congress. So it's very easy to change your mind with tariffs. As I wrote right here, only a few outcomes exist. The tariffs result in concessions from other parties and are taken off. Or the tariffs hurt the US customer and the economy and are taken off. Those are the only two results of this policy that I could see as being realistic. Either the tariffs result in concessions and agreements from other countries, or they hurt the US economy and customer and they're taken off. Now, based on the news today, I think President Trump and the administration got a lot of data that this was harming US customers and businesses. The capital is fleeing the United States. That investors don't want to invest money and build businesses in a place that's antagonistic to our trading allies and partners. So the tariffs were quickly altered. That's an option they always had on the table. When push comes to shove, I don't think that the Trump administration wants to cause enormous economic damage to the US. And when they're getting lots of data points that may be occurring, they're going to alter the policy. And that's what I see them doing today. The market, again, it's just incredible what's going on. I don't think I've ever seen this before. Has there ever been a time period where the Nasdaq's been up 10% in a day? Maybe we can go through some stock market history. The Dow surges 2,700 points for the biggest rally in 5 years. So this news is just gargantuan to the markets. Investors are just breathing a breath of relief. Now, what can we expect from here? What should investors be looking for? I believe over the next month or so, you're going to see a series of announcements of different countries in the United States coming together with trade agreements. This is really what the market has been looking for. President Trump said that we have 70 different countries that have contacted the United States in order to make a trade agreement. Now, I don't believe he's lying with that number. I think there's a lot of countries that want to make a deal with the United States. We've seen Israel come to the United States and say that they're open to it, and I think many more will follow. Because even though countries have different disagreements, lots of different views on economics and trade and all sorts of things, most countries agree that trade is mutually beneficial, that it helps both parties in the end. And I think that countries will work to reduce different tariffs and non-tariff barriers. And the market will be looking for that over the next couple of months. With a series of trade agreements made with other big countries, the market could be marching higher and higher as the future becomes more predictable, more clear, more optimistic. Now, with the 100% plus tariffs on China, these extremely high tariffs, I believe, are also temporary. We don't know how the deal is going to be constructed or which party will come to which, but I believe a deal is going to be made. China has had a lot of wealth by selling to the United States. The United States enjoys buying cheap Chinese items. Both parties benefit from this, and I think that there will be an agreement eventually. That's going to be it for this time. I'll see you in the next one.